I'm very happy to be moderating such an illustrious panel of founders of great companies across the UK and Europe. And so what I'd love to do is actually just to start out with an introduction to each of you. Tell us a little bit about your company, who you are, what you do, but not too long, because we've got some really chunky stuff to get through in terms of SMB lending, particularly around the UK.
Yeah, so thank you. Oliver Prill, I head Tide. I have the privilege to lead that since last summer. Tide is the leading digital challenger in the SME space. So we've got just now about 80,000 SMEs with their current banking account relationship with us. That gives us about 1.4% market share. And we're opening around 12% of all new business current accounts in the UK as it stands. So we have that. In terms of lending relevance to this, we are a platform. So we provide anything from banking down the admin suite, so payroll, tax, accounting. And we also, as part of that, offer a credit service, which is intermediary. And actually, we're working with Christoph, who will talk in a moment. And actually, we have a very neat integration with iwoca there that is, I think, world leading in many respects.
Great.
So
thank you, Oliver. Ryan.
Hi, I'm Ryan. I'm the Managing Director of Funding Options. So our mission is to help the small walk tall. So what that means, we help small business owners get access to finance as quickly and easily as possible. And that's with a panel of 70 different lenders, one of which is our good friends at iwoca. But that's across working capital, property finance, asset finance, 24 different products in total. Last year, we helped just over 2,500 small business owners get over £100 million in the UK. We just closed our Series A with ING. We launched over in the Netherlands. Yeah, and that's us.
Great. Christoph.
It's great to be back here again today. I founded iwoca 7 years ago, so it's been quite a journey since 2012. Our mission is to fund 1 million small businesses, which is a fairly tall number. And we have funded about 30,000 to date, which is a number we are very proud of, but you can see that there's a lot of runway that we have to achieve our mission. Last quarter, or Q4 2018, we have approved more small businesses for finance than HSBC or Santander did, which was a big milestone for us that we're building on. And we have another 90 years or so to fulfill our mission and continue to develop the platform to solve this cash flow problem once and for all.
Great. And Caroline.
Hi, I'm Caroline Plumb, founder and CEO of Fluidly. At Fluidly, our purpose is to help business owners sleep better. And we know that more than 2/3 of business owners are literally kept awake at night worrying about cash flow. So for us, they have a whole range of information about what happened in the past in their accounting system or bank. But what we really know they want to know is, can I make payroll? Do I have enough money to fund my business? And so at Fluidly, we're building an intelligence layer around business finances that helps people go from what happened in the past to what will happen in the future, and then from what to so what and now what.
Thank you. And last but not least, our favorite troublemaker, David.
I've been told to keep it short. So I'm David Brear. I'm the CEO at 11FS. I could give you like an hour presentation. No, I'm not going to do that. So just go look us up.
Keep you in your...
That was short.
Done.
Cool. Okay, thank you. So I thought what would be really interesting is a lot of people have a lot of different insights and points of view around SMB financing, particularly around in the UK. So I thought what would be really interesting if we kind of set the scene for everyone in the audience. You know, what are the different types of finances available to small business? And like, I'll throw it out to one of you out there. Maybe Caroline, I can start with you. You know, what I want to do is get a shopping list of the kind of financing that's available to the type of small businesses in the UK. Obviously, there'll be FinTech founders in the audience that will find it interesting, but also there'll be, you know, corporates and others in the audience who do work with SMBs as well and might find that interesting. So maybe start with a bit of the shopping list, and I'll try to go through all of you.
Sure. I mean, I think one of the things about SME finances is that, of course, they're not really looking for finance. What they're looking for is grow your business, pay my employees, you know, serve my customers better. And so financing, you know, is really about cash flow. It's really about the money coming in, money going out, everything else. And I think we tend to think about financing as being a bunch of credit products or a bunch of savings products. But actually, there are lots of other ways to finance a business. Credit cards, personal debt, getting paid faster from your customers that owe you, reduce the need for debt, eliminate the need for credit. Or perhaps, invest not in savings, but invest in growth, invest in people. So I think when small businesses actually think about financing, that's not really the pain point. They're really there to think about how the money flows overall. And of course, then we can talk about the different financial products that are available, from equity to debt to venture debt to working capital finance, invoice finance, lots of different types. But I think we can get really theoretical about SME finances, and we've got to remember that small businesses, are real people trying to serve customers ultimately.
Yeah.
Don't forget profit as well. Like people often, particularly fintech startups, generally forget making profit sometimes. So actually, reinvesting profit actually into making your business more successful as well is a thing that I don't know why more people don't do it, quite frankly.
Yeah. Christoph, with your iwoca experience, what kind of instruments and products are you seeing a lot of the people on your platform using? Do you specialize in one area? Could you talk a little bit more in depth about the kind of work you're doing with your 30,000 customer base?
So certainly, and that's kind of what we're trying to solve, more often than not, finance is not available. And you mentioned the fintech founders here, how hard it is every time to raise this little bit of money we need to get our plan materialized and our dreams fulfilled. It's just so hard. I've raised so many different rounds of funding, and every single time it's a real pain in the butt. And so, everything is out there. Venture debt is out there, equity sort of is out there. And then, of course, government grants are out there, various kind of forms of debt finance, from asset finance to unsecured finance, what we offer. But a small business owner doesn't have access to this wide range. A small business owner typically has access to no finance, or finance from their friends and their family, or possibly finance to their personal finance, through credit cards or personal loans or their mortgage on their house. That's the finance that a small business owner typically has access to, but that's clearly not what they should have to run and grow their business. And from all the insights that we get from the thousands of customers that we speak to every week, is what they really look for is that ability to tap into finance where and when they need it. And that's where it often breaks with the more complex finance products. They take 3 months or 4 months to get access to their tens or hundreds of pages of documentation. A small business owner just doesn't have the luxury to spend all of this time to get that. So that's, I think, where it really breaks. It's about the access to finance within hours or days, at least. And I think that's something that we've really added to the UK market, which wasn't available before we started.
Okay, and then I'm going to go down the road, because I think this is so important. Oh, have we missed anything, Ryan, Oliver?
Yeah. Actually, just to build on Christoph's point,
Okay.
so 95% of small business owners, their company is 4 people or less. So typically, getting access to finance is unfortunately a side of the desk activity. So, and as you know, with cash flow, when do we actually see, the peaks and troughs? We often talk about this of customers coming to us looking for finance. Weeknights, weekends, they're focused in terms of running the business during the actual working day itself. So they need to go out there and find something as quickly, seamlessly as possible. So solutions such as iwoca are fantastic for that, because they deal with it right at that point of search. What I would say is, from our perspective, so we're a product discovery tool. We are egalitarian. We are there to help the customers see the entirety of what's out there in the marketplace. But as us all here, consumers, we want instant gratification, right? We want to deal with it now. Watching Game of Thrones, I couldn't wait a second last night. I got back and I had to watch it. I had to watch it straight away. I want to watch the entire thing back to back. When it comes to business lending, not to compare the two here, but the point is that we see customers and they actually get onto the site, and actually what they want is just an instant answer. Can I get access to finance? And how much is it going to cost? So
because you said you had something like 70 providers of finance on your platform, is there a specific type of finance that you're finding the SMB owners are tending to go towards? So it might be they want that instant gratification. But is there a specific form that you find these SMBs, particularly in the UK, are really Like, what are they biting on? What are they not necessarily
Yeah,
biting on
unfortunately,
yet?
unsecured right now. So unsecured, I mean, revolving credit facilities, obviously a fantastic solution. And I think for a lot of customers, you know, they are going down that route where typically secured asset finance, property finance, you know, can take days, if not weeks. You know, some of the other lenders that we've got out there, you can get an immediate answer in under 10 minutes. You know, so more and more are going out after that route.
And why is that? Is that because
speed of access.
speed of access, the data is readily available to
Yep.
make those kind of instant credit decisions?
Yep.
Okay.
And I think the other thing to say is, you know, the small business ecosystem is really broad, especially when it comes to the credit profiles that you see out there. So there's some solutions which are fantastic almost as an entry level. So think of your startups, anything credit file company, business credit cards, you know, and again, or prepaid card solutions. So customers can actually go and build up their credit profile. What you then find is 12 to 18 months down the line, you might then be ready for your first unsecured loan. You might go international, you might need a merchant cash advance, you know, might not go to plan, you might need some distressed debt. You know, so there's a whole life cycle there,
Yeah.
and there's lots of solutions in terms of products that are mapped out against that.
So it strikes me there might be almost too much choice. And so, Oliver, what's your perspective from Tide Banking?
Yeah, so it's, I think building on this, we really see three, in the life cycle, three sort of stages, right? They're new to market businesses. People are starting out. You can debate when that ends, 6, 12 months. Really at that stage, you take equity-like risk. And you have to really question whether, you know, classic debt is the right thing. And most people actually do bring in either their own cash or it's secured against, you know, some of their personal assets, right? So, but effectively, it's equity type risk. Then you see the mid-segment, sort of more established small businesses. And there it is really very much around cash flow management, maybe going a little bit into the unsecured. And really at that level, things cannot be too complicated because, you know, there is no finance function. There is, you know, the owner has a limited appetite for understanding complexity. So it's essentially unsecured. Maybe some of them will dabble in, you know, very light asset finance, getting a car or, you know, factoring. And then you really get into the larger SME space, so the mid-sized companies, the 200, 300. And that's a completely different ecosystem. You have commercial brokers. You have a lot of specialist finance providers in this sort of space. So we really see these three segments.
Where do you sit at Tide?
So Tide is very much more at the smaller end.
So in the sort of the new and potentially up to mid.
Yeah, and mid, right,
Yeah.
up to that. And the other thing is we would very much encourage, that's actually how we think, if you look at how we internally define credit, it's actually not credit, it's actually the whole cash flow management, saving up for investments, right, making sure you understand your cash flow, preventing cash drainage, right, for example, an invoice not getting paid, etc. And I think a lot of what needs to be done at the smaller end is really around that. And if you look at why people don't get finance at the smaller end, next to the unsophistication, is often they start too late, or they're inherently uncreditworthy. So it needs to have more innovative solutions, and the answer is not just, you know, pick one of end products.
So it's kind of a suite. So then there's two that we haven't really talked about. One, equity. I know there are quite a few panels yesterday on venture capital and equity side of things. So I'll kind of park that to one side, but maybe one of you can raise your hand and tell me your perspective on venture debt, for example.
Yeah, so I think the venture debt market in the UK at A level is quite well developed. So especially if you look at we actually call startups internally the tech type startups. So that venture debt is quite established. For the vast majority of businesses, which we call new to market, it is really not available. I mean, you may get certain forms of, let's say, quasi-angel investments or friends and family chipping in something, but that's how you start, you know, your digital marketing agency, your barber shop, your restaurant. You know, it's not that you go for venture debt at that level, but you often start out in business with some of your own financial resources. You take personal debt that you downstream as equity into that business. Yeah. That's often how you do it at the earlier stage. And then at the later stage, there's indeed, you know, a question of can, you know, venture debt be broadened out, you know, beyond the sort of, you know, tech-centric universe.
Yeah, it's interesting because having worked in that space and currently sitting on the advisory board of a large debt fund, what we hear quite often from founders, the real objection sometimes tends to be around warrants. It's this whole unknown, mystical instrument, which is why traditional SMB lending is much more attractive. Do any of you have points of view on the concept of warrants?
I mean, I'm pretty against VC money, if I'm honest with you, generally. I just think it changes the dynamic of companies so dramatically in terms of actually what they're there to do. I think a lot of the things that you guys lend to are more, SMEs in its truest sense, because the idea of getting money to have to spend it over such a short period of time and having somebody on your board telling you what to do, that might just be me, but I'm definitely not up for that type of sort of relationship with somebody, however much money they kind of put into something. So, I think the thing that we're talking about here is I don't think there's any shortage of money, right?
Yeah.
To your point, I don't think there's any, like a high street lender, if you plan it efficiently and you've got enough time to go to those things, there is money available, and there's good alternatives to that here as well. I think the gap is actually understanding what you need, to your point. It's the lack of understanding that means somebody needs some funding in a very short period of time, which usually is what causes the problems. So, most people don't start businesses because they're actually any good at running businesses. They start a business because you're passionate about doing something, whether it's, making cakes or whatever it needs to be type thing. And that's the problem, is I actually don't think most people actually know how to run a business. And I think substituting that with VC money or substituting that with a loan or whatever it needs to be, that doesn't fix the problem. It maybe just, moves the problem further down the line in terms of actually where you're going.
So then whose hands is it in to educate the small businesses? Because obviously the audience here at Innovate Finance are very specific, very focused on FinTech, and obviously that's one of the big trends over the last 5 years for venture money and venture debt and SMB lending. All of you are FinTechs. So whose duty is it to really educate these SMBs, particularly the ones that don't play necessarily in the space that all of us do? And then from there, I'll sort of lead on to the question of, Caroline has something to say, which is great. So.
Well, I think it's a question of what is the right education, because actually business owners are there to run their businesses. So the question is, most won't have an understanding of profit. Focus is much more on cash. And I think what people are looking for is support around financial decision making, not necessarily education or financial literacy.
Yeah.
And I think what we've seen is the big decline of traditional bank relationship managers, who they might have previously turned to. Most people will turn to their accountant when they need advice. And so I think we see the next wave of support partners as really being the accountancy channel. And at Fluidly, one of the key things that we're looking to do.
And they're sort of sending referrals in to you guys then?
Yeah, so we work very closely with hundreds of accountants and then their end SMEs.
Okay.
So I think that is a part of it, but again, I think it's about not necessarily educating the market, but helping support decisions at the right time. And the two biggest problems in credit origination are what is the right time and what is the right product.
Okay.
And I think making the decisions around that is really important. People have solved, to some extent, the right product question, although I think that's still not enough. We're not using data enough into that decision making. But finding the right time is really important, with 40% of businesses only apply for finance within a week of need. So it is this really fast, slightly rushed, stressed decision-making.
Maybe to add to this, if you simplify it, there are businesses that need financing because they're waiting to get paid by their customer. And then there are other businesses that need financing because they need to buy something. But in essence, it's a cash flow problem. And it's two sides of the same coin. So I think, in addition to the education that is certainly required to give people the tools to understand their business better, which Fluidly does an amazing job at, I think technology can also go a long way to match these people in a better way. And I think that's kind of what you'll be seeing in the next few years as the future development of where lending and payments are going.
Ryan, is that what you're trying to do?
Yeah, absolutely. So I definitely support both the viewpoints. So I think I saw something with the British Business Bank saying 4 out of 10 customers go looking for working capital, down to actually customers paying them late. So clearly that's a huge issue that's there. I think the point that Caroline's making is, again, it's more about that kind of autopilot route that, you want auto financing. The customer ultimately needs to be guided in terms of a solution which is preemptive, predictive, hyper-personalized to actually their situation, and deals with it before they actually need it right now. So, again, in those situations, they might then get priced out in terms of a different product or the right product that they should have taken. So again, it's more about the timeliness. In terms of the solution provided, to be honest, that's down to us. Whoever goes out there and provides the best possible service, they will win the market. I don't think there's anything out there right now that's doing, I think there's lots of players that are trying to come up with the right solution. I don't think anybody's necessarily nailed it just yet, but I definitely think there's a great opportunity ahead of us.
How much are, this might be too detailed a question, but how much are your SMB clients driven by just simple factors such as interest rate? Is that a factor at all, or is it more about the overall package and the technology and the swiftness and the solution that you're providing to them?
I mean, we find, so just from our perspective, supporting what you guys said before, you know, that there's perhaps a lack of financial literacy, you know, with our customers. I mean, you think 5.6 million small business owners across the UK, you know, we split them up into two different piles. You know, the vast majority of them, you know, they're not some high-tech laboratory, right? You know, they are, you know, your baker, your hairdressers, your cycle shop, whatever else it, exactly, whatever else it might be. And actually for them, when they come in, they're just looking for that immediate kind of answer in terms of, can I get it? You know, it's later down the line that they start understanding that. And I think there's problems in terms of, from our perspective, you know, 24 different products, all priced slightly differently. It's really hard sometimes to compare the different products that are out there.
So I'd love to very quickly switch to the the view of the marketplace and what's happening there. So we've talked a lot about all of you as disruptors in the marketplace, but what are we seeing from players like the big incumbent banks, and you know, what is the government doing in this space? So I know, for example, the EU has pulled together some thoughts on funding for SMBs, a debt product that they'll provide to debt funds, for example. But what are we seeing here in the UK? And let's talk a bit about maybe some of your experiences with the British Business Bank. And I know, David, you mentioned you're doing some stuff with some of the larger incumbents. What are they trying to do to keep up with these disruptors on stage?
I think there's plenty of different, the big banks who are trying to sort of go through this trend. You know, we're seeing like a real shift between just trying to sell loans to like the services more broadly across all of the, so why do you need it? What's the rationale? How do you understand your business more? You know, Santander are doing Astro, we with NatWest did Metal. There's various different organizations out there who are kind of trying to bridge that gap between all of the different products they actually serve and providing those services that actually make them make sense. And we really think that's the sort of way forward, because it's, to your point, it's educating without being an educational program. You know, it's actually about, well, how do you provide a CFO you can carry around in your pocket? Because that's what people are lacking. It's the understanding of rudimentary business points, like you said, Ryan, and being in that position where you can offer that sort of instantaneous decisioning and almost like that early warning to problems. So, you know, to your point, it's not about getting 2 weeks out of running out of cash flow before you really should start thinking about cash flow. You know, it's like way down the line.
You should be able to call it far in advance.
Yeah, I mean, it's optionality. So knowing your options doesn't mean you always have to be using them, but
it's much more predictive.
Yeah, it's kind of empowerment, right? How do you actually empower these people to make better decisions?
Caroline?
Well, I think the biggest trend, and the thing that I think I'm most excited about the market, is the explosion of data and some access to that data. So, you know, you move from a position that you could actually now access accounting data at scale, you can access financial data at scale under PSD2, and suddenly, you know, this data is what's driving the preemptive and predictive decision making. Suddenly you've got the data not just to drive decisions in advance, but also potentially to innovate new products that would be suitable for underserved groups, because you now have new risk splitters and new ways to pre-qualify, new ways to create products for people who perhaps have short credit files or, you know, other where there's been a data gap. So I think that's the piece for me. I think the last 20 years of software have been fundamentally about creating systems of record, you know, creating data, filing cabinets in the cloud. And the next 20 years of software are going to be about creating systems of record, of results, systems of intelligence that take out the data and do something with it.
And that leads to the sort of instant gratification that Ryan was talking to. You get quicker, faster decision making. So I'm going to switch a little bit and talk about government. And you know, let's talk about government, what they're doing, for example, with, I won't classify them as government, but British Business Bank, for example, is an institution that's funding folks like you and other players in the market. What are they doing around policy to help SMBs? I'd love to get some of your thoughts on that.
The government here in the UK is really trying very hard to enable change. And in 2013-14, they passed the Small Business Bill, which had a whole range of measures to improve servicing to small businesses, in particular lending. And I think it had some successes, but not enough. And I think a lot more needs to be done on those, but it's definitely demonstrating the commitment they have to small businesses. And more recently, the BCR, which is effectively the RBS buying themselves out of their duty, coming from the 2009 bailout restrictions that they had when the government bailed them out, are putting about 750 million pounds into SME disruption at large, of which 450 million pounds are cash, going to great institutions that are really modern, innovative, like Tide, one of the big beneficiaries already. Hopefully some others on this panel, but certainly in the audience.
So all of you have applied,
and I think it's
when was the deadline for that?
5 o'clock today.
Yes, your applications.
Maybe that's where everybody is, I don't know.
Yeah.
And I think that's really exciting. That's a really kind of chunky amount of money going into small business banking. And so I think the next few years, you'll see huge amounts of innovation coming to scale and bringing all of these things that Carolyn brought to light, I think, to the benefit of small business owners. So I think that is actually something that is quite tangible and will lead to change.
So we're at the beginning of an interesting evolution of SMB lending.
Yeah, I was going to say, I think the thing that we do see time and again is just huge amounts of inertia. I do hate this one, but like they always say, you're more likely to get divorced than you are to change your bank, right? Yeah, it's just absolutely crazy. But actually, hopefully with these funds that are going to be going out into the market, we can actually start building trust into fintechs, building awareness, building preference, and we'll start seeing people more actively actually changing around.
And do you feel the SMBs are trusting you? Are they coming more to your type of platform than they are to the banks that they're currently inert with?
Yeah, so maybe just let me answer that, I'll give you perspective on that one. So with SME owners, actually the trust, I think, is reasonably high, right? In particular, given that most of our models are around providing functionality, and let's be honest, right? When someone lends to you, I mean, they take a risk on you rather than the other way around. The real problem, and this is the difference between small business and consumer, is that in small business, fundamentally, the entrepreneur is time-starved. I think this is what we hear again. The reason why they apply late is in part maybe a financial literacy, but fundamentally they're there to run their restaurant, right? Their barber shop. That's what they do. That's what they do all day. They work extremely long hours, and they just don't have time. And therefore, the fundamental problem, if you want, from an SME perspective is, do I really have the time to search around, right? And this is where all these solutions, we're not wanting to oversell Tide here, but where we come in as the platform, as the go-to place that effectively solves your problem before you know it, and then once you know it, you can do it in extreme speed. All of this is very important.
And that makes you sticky.
And this high usability in many ways is more important than narrow pricing or trust. I mean, really pricing, trust, of these are hygiene factors. So if you don't have them, they will not come to you, but you're not going to get, no one is going to go to a FinTech or any alternative lender because they, just for trust on their own. It's a hygiene factor. What they go for is speedy process, likelihood of, getting the loan, in a timely manner. And I think this is the difference also, by the way, between the smaller end of the market and larger market. What a lot of fintechs found very hard is, at the smaller end, if you lend £5,000, £10,000, the marketing acquisition costs are very high. Right? And this is where in the mid-market you have commercial brokers where the market of a sort works. But below that, actually the SMEs or the small businesses don't find to all of these great other finance offers. Because in addition to the fintechs, we have a rich scene. I mean, we have the Aldermores, Shawbrooks and so on of this world, sort of traditional challenger lenders, if you want, alternative lenders. But a lot of the reason why that doesn't work is the SMEs and they don't find together because of this marketing acquisition cost hurdle.
So very, very, very quickly to sort of sum all of that up, because I'd like the rest of the four of you to give us your views on opportunities for the future. So Christoph, it sounds like you have some beginning insights for me, because we only have a couple of minutes left in the panel, so.
Okay, I'll keep it really brief. And I wouldn't do my duty if I wouldn't be speaking about open banking here at Innovate Finance.
Thank you.
And so I'm sort of linking the sort of trust question with sort of my summarizing in open banking. So about 60% of people use open banking through us. And I think that's a real sort of high level of trust that they prefer to do it electronically than uploading data to our system. And so it has led to really a better customer service and higher conversions for us, so win-win for everybody. And if there's anyone from the banking industry here, there's still teething issues that I will not have the time to go into now. But I do think that it does show that technology is definitely on the rise and user experiences are improving, and with that sort of trust is building up with a new breed of finance companies like us. And with more funding from BCR, I think the next 5 years will be really exciting.
Very cool. So Ryan, Caroline, David, very quick last words from each of you.
Yeah, I think just to build on from that, so first of all, it's getting access to the data. Second of all, it's then looking for insights, actually looking at how can you better credit profile, especially the underserved market, the huge volume of small business owners, say trading under 500K, trading only for a couple of years. The other side of this in terms of the data is actually being able to effectively categorize it and then actually attach that onto a recommendation engine. So not just looking and saying, right, something's going on here, but saying, right, something's going on here, and actually this is the solution for you. So whether that's kind of better matching with finance solutions or better matching in terms of how else you can save customer money on energy, insurance, whatever else in terms of utilities, I think that's where we're going in terms of bundling up all of those services for a small business owner.
Great. Caroline and David.
I mean, perhaps because I have the Banking Competition Remedies Fund in my head at the moment. But you know, one of the areas that is of interest is this commercialization of financial technology. And I think we're going to see a lot more breakthrough technology coming into the market. So that's matching engines, of course, it's that preemptive piece. But you know, sort of from a Fluidly perspective, it's about delivering artificial intelligence and machine learning to this data in a domain-specific way. But I think we're going to see a huge uptake and spread across of technology, and that's going to become really exciting.
Yeah, okay, great. David?
I mean, I think for me it's, you know, getting to a point where we stop feeling like it's about loans or it's about accounts opening. You know, fundamentally this is about making small businesses more successful. So I think, you know, reduction in mortality rate of SMEs would be like a nice thing to have, right? The material difference that will have on GDP for the UK would be reasonably significant. So maybe less loans, more successful companies. That'd be nice.
That's great. So thank you very much, all of you, for coming on stage and giving us your wonderful insights. I'm going to actually spell out a summary of the words that I heard through this panel in terms of what we see as the future. So it's speedy process and decision making through better use of technology in, for example, matching engines, artificial intelligence, machine learning, better bundling of services, which will probably then enable the success of companies longer term, getting loans quicker, open banking, customer service, and then the pricing and trust is just hygiene. So is that a decent summary from all of you? Okay, everyone, thank you very much, and thank you so much for your time.
Thank you very much for your time. Thank you.